There's the closing bell on Wall Street, and now it is market domination overtime. Jared Blicker going to be here in a moment to get us up to speed on the action from today's session. I'm going to start with the major averages here. We've got the Dow finishing higher, a real divergence happening today, with the Dow higher by about 162 points, or about a third of 1%. The S&P 500 down by 0.5%, and the NASDAQ Composite down 1.4%. Now, remember, last week we got the University of Michigan's consumer sentiment read that disappointed the market. Today, it was the Conference Board's turn. We got their read of consumer sentiment for this month, showing the biggest drop going back to 2021. A lot of concern in the expectations portion of that confidence report. So that was the latest sort of catalyst to send things down, along with some nervousness sort of in the tech sector. Obviously, you saw that in the sell-off in the NASDAQ, and in particular in the continuing sell-off that we've been seeing in the Magnificent Seven. Jared's got a closer look at today's action. Hey, Jared.
Thank you, Julie. Just want to take a quick look at volatility. We'll be taking a deeper dive with Josh in about 30 minutes. Here is the VIX. Now, we're not closing above 20, so nothing to write home about. We did reach just above 21 earlier today, but we do want to keep monitoring this. I'll show you a 6-month chart real quick so you can see some of the spikes as they have evolved, or maybe not here. There we go. Well, let's move on to the sector action, and we can see staples. If there's one bright spot in the market recently, it has been staples, although that is a defensive sector. That's up 1.44% today. Real estate has also been holding things up. Healthcare has been outperforming, and then you get into materials and industrials. Those are the other two green sectors today, but communication services took it on the chin. That's down 1.5%. Energy right behind it, tech right behind that, and you can see this playing out in the NASDAQ 100, where aside from Amazon, you don't really have a lot of green in some of the bigger names. In fact, Tesla was down 8% today, so some goings on there that we will track in tech. And let's just skip over to ARC Innovation. This is disruptive tech. This is smaller tech outside of Tesla. For the most part, you can see Coinbase down 6%. That's with Bitcoin breaking below 90,000 for the first time in 3 months. But we want to stick to tech right now. So let's take a look at the semiconductors. NVIDIA down 2.8% ahead of its earnings tomorrow. Also seeing some weakness in AMD, LCRX, and Intel. That's down 5%. So broad weakness, I would say, but not in the staples. There are some bastions. There are some areas of strength in the market. Josh?
Thank you, Jared. S&P 500 extending its losing streak to 4 days in a row now. And our next guest says the fundamentals for the market are becoming more and more nerve-wracking. Joining us now is Steve Sosnick, Interactive Brokers Chief Strategist. Steve, great to see you here on set. So we had inflation worries, and those are still worries, yes, at least in some corners. Now we have these kind of growth worries bubbling up. I'm hearing talk of a soft patch. Steve, we had the consumer confidence report today that disappointed. I believe you use the technical term stinker.
Yes,
I think is how you put it.
Exactly.
So what added up? What are we seeing in the market? Make sense of it for us.
We are seeing malaise. About a month ago, I think it was 2 Michigan reports ago, because they come out every 2 weeks. I sort of got concerned because that number was kind of lousy, and the 1-year inflation expectations shot up. And those usually follow gasoline prices at the pump, and yet they shot up and they didn't move. Then you had another one, well, and I forget the exact order. You had another Michigan one that stunk. The long-term inflation expectations went up. You also, in the midst of that, had a terrible retail sales number, which disappointed. And then that was followed up by Walmart saying, yeah, this is all going pretty much the way you think it's going. And so throw on today where the consumer, where the Conference Board numbers came out, and there's no way to sugarcoat those. They stunk, pretty much like retail's. These are shockingly bad. The problem I'm having here is, and this is why I think the bond market, we could call it a flight to safety, but I really do think it's economic fears, because this is back to economics 101. GDP equals C, consumption, plus I, investment, plus G, government, plus net exports. You're slashing G very quickly. And it's not just in Washington, and it's been doing so loudly that it's affecting, all these things have multiplier effects. And we'd ridden a lot of fiscal stimulus higher. Now we're reversing it, and it's affecting people's consumption. So if you take out the G, if you really slash the G, and then you affect the C, which is 2/3 of the economy, you have bond yields going down by 8 to 10 basis points, like we've been seeing.
I like this is an economic class. GDP equals consumption plus investment plus government plus net exports, right? Yes. I need my blackboard behind us. You know, as you well know, there was so much enthusiasm, even euphoria in the market post the election, right? And by market participants, looking for big growth, looking for tax cut extensions and more tax cuts, looking for less regulation. Where are all those people?
Well, that's kind of the problem. And, for example, ground zero for that is both Tesla stock and Bitcoin, which were two of the projected huge winners from the new administration. Now, let's put in perspective. The administration's what, like 5 weeks old? I mean, so there's a lot going on here. But if you look at where the priorities are, it's been to cut. You really haven't mentioned a lot of things that people were banking their hopes on. So you had this wave of enthusiasm. We've seen a tremendous amount of risk assumption, people going after risky stocks because the momentum was there. And those are the stocks actually that are getting the rugs pulled out from them, because I think people got impatient and they got ahead of they really got ahead of themselves. Buy the rumor, sell the news. Well, in this case, it was buy the rumor. And right now there hasn't been the news that they're looking for to give the follow through.
Where, Steve, is the Fed in all this? Because we had another strategist on the show today who recently downgraded equities to neutral. And we asked him, he said, in his opinion, the Fed's basically stuck where they are right now.
And therein lies the other part of the problem, Josh. Yeah. I mean, rate cut expectations have been creeping higher. They were down to about one cut plus maybe another 50-60% chance of a cut. When I looked earlier today, we're back to having a full cut in July, another cut in October, and then let's say another 40% after that. That's another sign that people think the economy's slowing down. But to the point you just raised, the Fed isn't, until there's some clarity about tariffs and other economic policies, the Fed isn't going to act barring some real problem. So you run the risk here of the economy starting to decelerate and the Fed sitting on the sidelines with their hands tied. That's a bad situation. It's actually literally the flip side of what we had in 2024, where you had fiscal expansion and a good economy and a Fed that was cutting rates.
As part of the conference board, they also ask folks what they're expecting in terms of stock price movement, right? And so they say the percentage expecting stock prices to be higher in 12 months. You see it there. It went up, and then it's legged down a little bit. It's still at a pretty high level, though. And you've noticed the pattern of, which was a very reliable pattern, of dip buying. People coming in every time stocks pulled back to buy. Is that still happening? Is that trend intact?
It's still happening, but I have to believe some of it's not working quite so well. I mean, for example, we sort of, I don't see all the numbers in depth. Let me be very clear about that to anybody who's listening. But I do look, I do put out a piece once a week with our top 25 most active names. And those are still to the buy side. And the most active names, the most actively bought names over the last week were Palantir and Tesla, which were not exactly big winners. So the faith is still there. People aren't really selling. But at some point, buying a dip has always been a good thing. As I've said, there's probably some guy in Mesopotamia who was buying olive oil when the price dipped, in the marketplace there. It does tend to work, but you have to think about why you're buying the dip. Are you buying the dip just because it's down, just because it always works reflexively? That can get you into trouble. Are you buying something because it's legitimately on sale and you had a good deal yesterday and you have a 5% better deal a week later? Well, then that's a good reason to buy the dip. I think people got away from being selective about buying dips to just reflexively buying dips. And that behavior may need to work itself out.
What about NVIDIA? Is that on your list?
Well, it is. NVIDIA actually, it's interesting. NVIDIA, it got surpassed this week. It's always been number one or number two, but Palantir actually zipped past NVIDIA. The activity didn't change in NVIDIA, just people started really trading a lot more Palantir. And Tesla, it's always been Tesla and NVIDIA, and then Palantir sneaked in. But there the trading has been a bit more balanced. It's more of a trading vehicle. We'll see tomorrow, what comes of this, but I think we all have to be watching and waiting, but the market has shown some, in terms of the options market, we are seeing some risk aversion in play here in NVIDIA. They were pricing in about an 8.5% to 9% move for tomorrow, which, considering NVIDIA, you think of it moving these big moves, but actually 4 of the last 6 moves have been rather modest. And there's actually what we call a little bit of a downside skew, meaning people are paying a little more in implied volatility terms for downside protection than they are for upside protection, which during most of the AI-fueled enthusiasm, they were either basically paying about the same or actually even paying a little more for the upside.
Interesting. All right. Well, we'll see how that plays out and if those people get caught out or not.
Exactly.
Appreciate it, Steve. Good
Thanks,
to see
Norm.
you. Well, Apple shareholders backing the company's efforts to push back against a DEI retreat. Investors in the tech giant voting down a proposal to scrap Apple's diversity, equity, and inclusion initiatives. Here with more, Yahoo Finance's Alexis Keenan. And Alexis, of course, you've been following the DEI rollback really across the corporate world. So what did we hear today at the meeting?
Yeah, so shareholders in Apple are not going to force the company to do what this conservative think tank, the National Center for Public Policy Research, wanted, which was for the company to consider abolishing all of its DEI efforts. We still don't have a tally on the percentage of voters who voted down that proposal, but what they were claiming is what a lot of these proposals are putting on the table and saying. What they're arguing is that corporate DEI now poses legal risks, financial risks, also reputational risks in the wake of two different Supreme Court decisions. One was in 2023, and that's when the court outlawed race as a factor in admissions for college applicants. And the other is a 2024 Supreme Court case that made it easier for employees to sue employers based on discrimination. So that's kind of the argument that's being put forward by these proponents. In a question from shareholders, CEO Tim Cook said that Apple has never had quotas. He went on to say that the company's strength comes from hiring the best people. He said, however, as legal landscape around these issues evolves, he said we may need to make changes in order to comply. So in the background of that, some of this legal landscape, you have the executive order that President Trump issued on his first day in office, doing away with DEA at the federal level and also warning private enterprise that they should be cautious and they should end any illegal DEI. So that's going on. In addition to that, you also have some new SEC guidance that came out of the Trump administration this month that makes it really harder for shareholders to get these proposals, any kind of proposal on the table. Of course, the SEC is a bit of a referee, right, in deciding which challenge proposals are going to make it onto the actual ballots.
So this is settled for now, I guess, until the next shareholder meeting.
Yeah, it's settled for now. Apple is going to be able to carry on and not have to make these considerations. The company has been very strong about standing by its DEI initiatives, and we continue at Yahoo Finance to try to track as many as we can, those companies that are standing by versus doing away with their policies.
Scorecard. Thank you so much, Alexis. Appreciate it. Well, let's get to some earnings now. Intuit shares, they're higher by about 3% following that company's latest results here. Intuit coming out with second quarter earnings per share, $3.32. $2.57 was the average analyst estimates. Although it seems like some of its forecasts might be a little bit short of estimates. The company said for the third quarter, adjusted earnings per share will be at most $10.95. Analysts had been looking for $11.51, but that doesn't seem to be slowing down the stock there, Josh. And the company also reiterating its guidance for the full year.
Yeah, and for this stock, he had not been working. It was down about 10% year to date heading into this print. We get this report, by the way, at some interesting times for the IRS, which is interesting. Acting IRS chief retiring, layoffs at the agency. I know the street very focused on the print, obviously, but also macro indicators, competitive landscape, what the company is particularly seeing in small businesses, just comps and sentiment, that'll come up as well.
Yeah, so on that conference call, any effect from the changes that are being made to the tax filing system. But in the meantime, its fiscal second quarter saw revenue up by 17% here. Remember, the company TurboTax is the one it's best known for. It also owns Credit Karma, QuickBooks, and MailChimp. So those are the various divisions.
All right, and tune into Yahoo Finance tomorrow. We're going to be talking to the Intuit CFO at 10 a.m. Eastern. Coming up, we'll get you caught up on a few other tickers that are moving following earnings. Stick around, much more market domination, overtime, that's still to come.
Cava shares falling as the company's fourth quarter results hit the wire. Yahoo Finance's Brooke DePalma joins us here with the details. So give us the numbers.
Good afternoon. Well, certainly revenue beat driven by loyalty. We saw same-store sales growth. We also saw higher foot traffic for the quarter. Adjusted earnings per share coming in at 5 cents, coming in less than what Wall Street expected of a 7 cents. Revenue coming in at $225.1 million. That's compared to Wall Street's expectations of $224 million. Now, same-store sales growth did beat on a big print here, up 21% for the quarter and up 13% for the year. Now, it's important to note here that the CEO said when I spoke to him on the phone just moments ago that they continue to win with this value proposition compared to their peers. He said we've seen resiliency with our consumer. We've been kind of a port in that storm with our very relevant value proposition that's clearly been resonating with consumers, driving those outsized traffic growth numbers. Now, guest traffic for the quarter was up more than 15%. Also worth noting here that investors largely looking at that outlook. They do expect same-store sales growth for 2025 to come in between the range of 6% to 8%. Wall Street was hoping for an increase of 7.85%. Now, that is higher than the outlook that they said last year, and the CEO told Yahoo Finance that it reflects that underlying strength that they're seeing and also reflects a normalization after the dynamic growth that they've seen in the past 3 years. They did raise prices in January by 1.7%. They have no plans to increase prices again this year. Also worth noting, I did ask CEO Brett Schulman about inflation. They do expect low to mid-single-digit inflation, both on the labor and the cost of goods front. He said specifically from a tariff standpoint, we don't see any outsized impact. We do source the majority of our ingredients domestically, and we also have a very diversified basket that's made up of 25% produce, 25% proteins, 25% groceries like those seasonings and spices. He said they're not really exposed to one single thing, and that also includes not being overly exposed to avocados like their competitor Chipotle is.
All right, stock down about 4% here in the after hours. Thank you, Brooke. Appreciate it. Workday, meanwhile, they're out with their latest results as well. Let's get you those numbers. So Q4 adjusted EPS 192. That's versus expectations of 178. Q4 revenue clocks in at $2.21 billion. That's versus an estimate of $2.18 billion. So beats there on the bottom and the top. Spinning ahead, in terms of forecasts, I see a Q1 subscription revenue, $2.05 billion. Street was closer to $2.06 billion. And to 2026, they're looking for, let's say, adjusted operating margins of 28%. Is what they're calling for. The street was closer to 27.5%. They see 2026 subscription revenue, $8.8 billion. The street was at $8.8 billion. That stock is higher right now in the after hours. Heading into this print, it had not done a whole lot in 2025. Julian, it was actually down about 15% over the past 12 months. I know some analysts had chalked the underperformance, at least in part, up to what they perceived as sort of expectations management at the company, but we're higher here.
Yeah, it's interesting. Workday and a lot of these other enterprise software companies, there's the expectation that they could be the next wave of companies to benefit from the Gen AI boom. And Workday did kind of go back and talk about some of the announcements it made during the quarter, including some AI agents that it has now. It sort of has an AI agent management system it has rolled out to its clients. So that's one of the things that it's talking about. So we'll see if there's more discussion about all of that on the call. I would imagine that there would be here. But, you know, sales growing 15% in the fourth quarter. So it's kind of plugging along there, but not seeing soaring year over year.
Yeah, I know some bulls, like our friend Brent Till over at Jefferies, likes this one. He's telling his clients heading into the print, he likes the valuation. Says if the company lowers the bar to mid-teens growth, commits to higher margins, he bets investors get more constructive. They're constructive, at least right now, after hours. Shares of Lucid, meanwhile, let's check out those. They are higher following its latest results. And Yahoo Finance's Pras Subramanian here with the very latest numbers. Pras.
Yeah, Josh, so better than expected results here, but I think they'll be updating Lucid's Workday situation with a new CEO transition here. Peter Rawlinson stepping down. 12 years of the company, long run there at Lucid. Kind of shepherded the company through its Lucid Air, the news SUV that just came out. So he's going to step down and have an advisory role. Current COO Mark Rinteroff will be the new interim CEO while they conduct the search. Peter Rawlinson said in a statement, quote, "Now that we have successfully launched Lucid Gravity, I've decided it is finally the right time for me to step aside from my role at Lucid. I am incredibly proud of the accomplishments the Lucid team has achieved together through the tenure of the last 12 years. Now the numbers. Top line results here beat 234.5 million versus 212.4 estimated. A smaller loss than expected here of 22 cents per share loss versus 25 cents on an adjusted EPS basis. And this resulting in an adjusted EBITDA loss of 577.3 million, around the 576 that was expected by analysts. So better than expected results here, matching the loss numbers here, but then also the new shakeup with the top executives. So we'll see who eventually Lucid has in charge there. But Peter Rawlinson, the longtime guy who we've had on before on the show, stepping down to an advisor role.
Yeah, big change there. Thank you, Pras. Appreciate it. And we got another company that we are watching, shares of Maple Bear, known as Instacart, but Maple Bear's the corporate name. Instacart sinking in after hours following a miss on its fourth quarter revenue here. Just running through the numbers, that fourth quarter revenue number was $883 million. Analysts have been looking for about $891 million. Fourth quarter orders, 77.5 million. That fell short of estimates, and fourth quarter adjusted EBITDA at $252 million. That number was ahead of estimates. So mixed picture here. The company says its first quarter adjusted EBITDA will be $220 million to $230 million. Analysts had been estimating $237 million. So basically seeing this lower forecast here is what's driving those shares down, in particular down by 8.7%. And really coming on the heels of some of its competitors like DoorDash, which came out with a more positive outlook, Josh.
Yeah, in the letter to the shareholder here, company sounded kind of a positive, optimistic tone. 2024 was a terrific year, they say, for the company. They point out the end of the year with Q4 orders and GTV growth at 11% and 10% year over year, respectively. They point out they continue to have the leading share of sales by far, they say, in both small and big baskets amongst digital-first players. This stock, it was also one of these names that had really strong one. It was up about 50% over the past 12 months, but at least initially now, some disappointment clearly in the after hours.
Yes, most definitely.
All right, time now for What to Watch Wednesday. That is February 26th, starting off on the earnings front. Huge day of earnings, including Salesforce and Lowe's. But tomorrow's big ticket item we know is, of course, NVIDIA. The AI juggernaut is announcing full year and fourth quarter results that's after the close. NVIDIA recovering from a steep sell-off following the emergence of DeepSeek last month, but analysts still expecting a monster quarter from the company with a significant ramp-up in Blackwell chips. Yahoo Finance will have special coverage of all things NVIDIA tomorrow, with coverage starting at 4 p.m. Eastern.
Taking a look at the Fed, we'll be getting some commentary from Atlanta Fed President Raphael Bostic in the afternoon. This comes after comments from Dallas Fed President Lori Logan earlier today. Logan saying it would be appropriate for the central bank to purchase more shorter-term securities when Fed purchases resume.
And moving over to housing, monthly new home sales data for January that's come out in the morning. Economists forecasting sales to drop compared to December to 680,000.
Really, we could have just had NVIDIA be the whole What to Watch.
So true. I know.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.